Hi everyone, a very good afternoon to all of you present here. I'm Nitisha Jain, Assistant Manager of TaxBuddy.com, and my area of expertise is income tax. Today we all are here to know about the latest topic about the taxation of cryptocurrencies and what are the changes which are getting effective from 1st of July 2022. So, before starting our session, I would like to welcome you all who have joined in such a good number, and I'll make sure that you are going to get very useful content from this webinar. So, before any further delay, let's move towards our today's agenda. We are going to discuss, first of all, what is cryptocurrency. I'll give a brief introduction on that. Then, what it is and what is the purpose of cryptocurrency, how cryptocurrencies are made, then is it good or bad? And this will be followed up by the major topic, taxation of cryptocurrencies. Now, on selling these virtual digital asset, what is the taxation amount which you have to pay? This will be followed up by Q&A session. Coming on to the introduction part. So cryptocurrency, sometimes which is called as crypto, or is any form of currency that exists digitally or virtually and uses cryptography to secure the transactions. It don't have a central issuing or regulatory authority, instead using a decentralized system to record the transaction and issue the new units. Talking about what is cryptocurrency, it is a digital payment system that doesn't rely on banks to verify the transaction. It's a peer-to-peer system that can enable anyone, anywhere to send and receive the payments. Instead of being physical money carried around and exchanged in the real world, cryptocurrency payment exists purely on digital entries to an online database describing specific transactions. So when you transfer your cryptocurrency funds, the transactions that are recorded in a public ledger. It will be stored in digital wallets. Cryptocurrency received its name because it uses the encryption to verify the transaction. This means that the advanced coding is involved in storing and transmitting the cryptocurrency data between wallets and to the public ledgers. The aim of encryption is to provide the security and safety. The first cryptocurrency which was introduced was Bitcoin, which was founded in 2009 and remains the best known till today also. Much of the interest in cryptocurrency is to the trade of profit, with speculators at times driving prices skyward. Now, how does the cryptocurrency work? It run on a distributed public ledger which is called as blockchain, which means a record of all the transactions updated and held by the currency holders. Units of cryptocurrencies are created through a process which is called as mining, which involves using computer power to solve the complicated mathematical problems that generate coins. Users can also buy the currencies from brokers. They then store and spend them using the cryptographic wallets. If you own cryptocurrency, you don't own anything tangible. What you own is a key that allows you to move a record or a unit of measure from one person to another without a trusted third party. Although Bitcoin has been around since 2009, cryptocurrencies and applications of blockchain technology are still emerging in financial terms, and more users are expected in the future. Transactions including bonds, stocks, and other financial assets could eventually be traded using the technology. For example, if we need to buy a share, sorry, from a stock market, we can do it easily, right? With the help of broker. We'll confirm the exchange order and then we will receive the shares. We don't need to contact the seller in person. Reason for choosing a broker is we don't know if the seller has the stock or not. This is known as principle of novation. In cryptocurrency, involvement of the third person is not needed because all the transactions are stored in a common location and it is viewable. The identity of the person who made the transaction is encrypted. Can cryptocurrency can be converted into cash? Answer for the above question is yes. For example, one of the cryptocurrency Bitcoin can be exchanged into cash on a cryptocurrency exchange. There are platforms such as Coinbase and Kraken that help the users to convert the digital money to physical cash. How safe is cryptocurrency? This is a very common question which would come into any layman's mind, because as in the current scenario, we are very much, some people are very much risk averse and they are not ready to take some kind of risk. That is why some people feel that cryptocurrencies would be very risky. So transactions done using cryptocurrencies are highly secure. There is chance of earning huge amount when compared to the mutual funds or share markets, but it comes with a high risk. As we all have heard since starting, that as whenever you'll try to earn more money at that particular time, you'll have to ensure that you are involving into much higher risk. That is why it is said that if the cryptocurrency is going to give you higher returns, along with that, make sure that get ready to take some high amount of risk also, because the volatility of the cryptocurrency would is very high. Either we earn high return or lose what we have. uh, Following this, another question comes, that is cryptocurrency good or bad? Every coin has two faces. Similarly, there are both good and bad about investing into cryptocurrencies. One should know both the phases before investing. Let us consider only the good side about investing. Returns may be massive and everything is instant. So, you can buy or sell when there is fluctuation in the market very easily. There is a cold wallet storage option where we can control our own privacy key. This key helps us to access our coin in the blockchain. There are some obviously disadvantages of cryptocurrency also. Now, what are those? We'll be looking to that. One of the biggest drawback of cryptocurrency is the security. There are stories where exchanges are hacked and peoples who held coins in those exchanges lost everything. There are a lot of people with less experience and knowledge, which leads to huge loss. Since it is fully digitalized, there is technical difficulty also, such as network issue and so on. Conclusion is, just know first of all the ups and downs before investing into crypto. Indian government has brought in some much needed clarity and cheer in the market of taxing digital token transactions. Now coming on to the about the taxation of cryptocurrencies. So CBDT, which is the Central Board of Direct Taxes, has issued detailed guidelines on the levy of tax deducted at source, TDS on virtual digital assets or crypto assets, which will be effective from 1st of July 2022, which was yesterday. So from yesterday, many changes came into this cryptocurrency taxation. Changes was already have been proposed already, but from yesterday it has been came into picture. It has been effective from 1st of July. So it has specified the timelines to be adhered to by the parties to a virtual digital asset transactions in reporting to the tax authority, including the date of transactions and the mode of payment. Union budget for 2022 to 23 had declared 30% tax on income from cryptocurrencies from the new financial year and 1% TDS on all the crypto transactions starting from July 1st. Now, what are the new taxation rules? Coming on to the new section which was introduced is, first of all, TDS section of 194S, and another section comes is 115BBH. Exchanges will have to deduct tax from the crypto buyer's side in a transaction according to the new rules. This tax must be paid to the sender within 30 days of the end of the month during which the deduction was made. Users who claim a refund of their taxes from the government must show that TDS certificate issued to the payee within 15 days from the due date of reporting the tax, the government has clarified while TDS on loss-making transaction is refundable, the inability to offset crypto losses against gains remains a sticking point. So, if you are having any cryptocurrency loss, still it has there is no clarity about this that cryptocurrency loss can be set off from cryptocurrency gain. Now, effective from 1st of July 2022, proposed TDS section, which is 194S, on payment for transfer of virtual digital assets to a resident government is making sure that all the transactions involving virtual digital assets gets reported and hence gets taxed. In case of any payment made by crypto exchanges, TDS will be deducted at the rate 1% on such sum of payment. Further, in case cash is not sufficient to meet the liability of deduction of tax, then payer shall release the payment only if either first thing he has collected the amount which is equivalent to the TDS amount from the pay. Secondly, he insists the pay to make the payment of TDS on his own and submit the proof to the payer. TDS will be applicable on any transfer of virtual digital asset. Therefore, if for example, Bitcoin is sold and converted to the USDT, then this shall will also be considered a transfer and hence TDS would be applicable on that. Then secondly, no TDS would be applicable if the payer is specified person and the value of consideration to a resident is less than rupees 50,000 during the financial year, and in any other case the limit would be the limit which is proposed is rupees 10,000 during the financial year. So to make it very easy, there are exemptions which are provided, which are 10,000 rupees for any person other than specified person. But if it is for specified person, then this limit is maximum up to rupees 50,000. If you have sold amount between this, then you are not liable to pay any kind of TDS on this. Then there are some other amendments also which were applicable from yesterday. Those are like earlier the Aadhaar and PAN linking penalty was rupees 500, but from now onwards, which means from 1st of July onwards, PAN Aadhaar linking fees of rupees 1000 would be applicable if the PAN Aadhaar link is completed on or after 1st July. Earlier till 30th June, this charge was rupees 500 only. So when an individual links their PAN and Aadhaar, they first have to pay the penalty and request to link PAN Aadhaar once the payment done reflects in the e-filing site. Then there is another amendment also, which is TDS rules for doctors, social media influencers will be subject to 10% beginning from 1st of July 2022 on any kind of benefits which are received from the companies for sales and promotion. For sales promotion. Earlier, there was no such kind of rules to pay the TDS liability for doctors or social media influencers. But now, from 1st of July and onwards, TDS rate at the rate 10% will be applicable for if any kind of promotion they are doing, any kind of sale promotion they are doing. So on that, if they are gaining any kind of income, earning any kind of income, they'll have to pay the TDS. So this was all about the basic cryptocurrency taxation. Now, if you are having any kind of doubts, I'm here to answer all your questions. If you have any doubts, you can please just post down in the chat box. Are we having any questions? So this was just about the uh, taxation of cryptocurrencies which are effective, the changes which were made in cryptocurrency taxation. This PPT will be helping you to know what were the major amendments and everything about the taxation of cryptocurrencies. Shubham, as of now, there is no taxation on conversion of currency. This was about the cryptocurrency taxation. So I think there are no more questions. Uh, I hope this was the taxation of cryptocurrency part was very useful for you guys. See you till the next webinar with the new topic. Till then, thank you so much for joining. Have a happy weekend. Thank you.